Folks, I believe this stock is screaming buy right now, and I know that's a bold statement, but when you see what I'm about to show you, I think you'll understand why. Because there's a company trading under $1 that most people have completely ignored. But here's the thing. Ignoring it might be a mistake. Let me explain. There is a revolution happening right now, not in Silicon Valley, not in some tech campus with a fancy logo. It's happening in the real world, in retail stores, in hospitals, in banks, in the streets of major cities. Robots. Autonomous AI robots. Not in movies, not in a lab. Actually deployed right now. Serving real businesses and most investors. They've no idea. Now here's what makes this interesting. We're not talking about a startup that just filed paperwork and has a big dream. This company has been operating since 1982. Over 4 decades. It has government contracts, bank relationships, boots on the ground across multiple countries. And then something happened. It evolved completely from a traditional security company into an AI and robotics powerhouse, and that evolution is happening fast. Here's what they're building. An agentic AI platform. Now what does that mean? Think of it this way. Regular AI answers your questions. Agentic AI takes actions. It makes decisions. It completes tasks. It runs autonomously without a human telling it what to do every second. That's a completely different level, and this company is already commercializing it. In retail stores, tracking inventory with AI cameras. In healthcare, launching AI-powered therapy solutions. In travel, deploying AI agents that plan entire trips for users. And it's not stopping there. Just recently, they completed a new acquisition. A healthcare-focused AI company added directly to their platform. That's expansion. That's momentum. Now, let's talk numbers, because this is where things get real. Annual revenue, over $36 million. Gross profit, up more than 16% year over year. And losses down over 80% compared to the prior year. Read that again. Losses cut by 80%. That is not a company falling apart. That is a company cleaning itself up. Getting lean. Getting focused. Getting ready. And here's something that really stands out. The company just launched a $5 million share buyback program. Why? Does that matter? Because companies don't buy back their own stock when they think they're going to fail. They do it when they believe the stock is undervalued, when they believe the future is worth betting on, and this company is betting on itself. Now let's talk about the retail expansion. One of their AI smart retail solutions was just extended by a global sportswear brand in Thailand. They're now deploying at 5 additional locations in 2026. 5. Plus 1 more in 2027. These are not pilots. These are repeat orders from an existing client. That is the definition of a sticky product. When customers come back again and again. That is proof that technology works. And the robotic side, think about that model. You don't sell a robot once. You charge for it every single month. Recurring revenue. That's the kind of business model that changes everything. Because it compounds. Slowly at first, then all at once. Now, I have to be honest with you, because this channel doesn't hide the risks. And this stock has real ones. The company is not yet profitable. The stock is currently under $1. And there is a NASDAQ compliance notice in place. The company needs to get back above $1 to stay listed. That is a real risk. And you need to know that going in. High volatility. Regulatory uncertainty. A long road to profitability. This is not a stock you put your savings into. This is not risk-free. Do your own research. Always, but here's what I keep coming back to. The next earnings report is coming, May 4th. And a lot is building in the background right now. New acquisition completed. Retail contracts expanding. Buyback in place. Gross profit trending up. When everything lines up like this, before an earnings call, that's when the market pays attention. And now you've waited long enough. The company we've been discussing is Godforce AI. Ticker GFAI. Trading on the Nasdaq. Current price under $1. Now let that land for a second. This stock was once trading at over $300. Today, under $1. Same company, but a completely different moment. And here is what the market is missing. The robots are already deployed. The contracts are already signed. The buyback is already in motion. A new acquisition just completed. Earnings just days away. Everything is already in place. The only thing that hasn't happened yet is the market catching up. And when markets catch up to companies like this, they don't move slowly. They move fast. Very fast. So ask yourself one question. Not whether this stock is perfect. It's not. Not whether it's risk-free. It isn't. But ask yourself this. The robots are running. The contracts are live. The buyback is funded. The earnings are coming. Will you be watching before it moves, or after? Because in this market, timing is everything, and the window right now is open. I'll let you decide. If this breakdown gave you something to think about, hit subscribe. We do this every single day. New stock, new analysis, same mission. See you tomorrow. This video is for educational purposes only, not financial advice. Always consult a licensed financial advisor. GFAI is a high-risk stock.